Greetings, ladies and gentlemen. I am live. It is 3:02 p.m. Eastern Standard Time, and I'm going to talk about some stuff today that you may or may not be bored with, but it's something that you're definitely going to need to know. And I think there are a lot of people that still don't really understand capital gains tax. And, you know, with what's going on in the market right now, what's up, Jason Brinkley, first in chat. There's a lot of, I think there's a lot of confusion around what's going on in the market. I think people are, there's still uncertainty. Bitcoin's been hanging out pretty solidly for around $7,300 now for the last, I would say, 24 hours. And, the Bitcoin dominance is starting to fall a bit. Nothing drastic, but it is starting to fall a bit. I mean, it was as high as like 89% at one point, and now it's come down to around 64%. And I'm going to start with this. Bitcoin dominance has not only broken down from a 2-year long uptrend, but has also retested the trend line as resistance and failed to reclaim the key level. With trendline support now confirmed as resistance, it's likely that Bitcoin dominance can see an extended downtrend in the days, weeks, and months ahead. But what does this mean for altcoins and the rest of the cryptocurrency market? So let's see what this guy has to say, and then I'm going to get into something pretty interesting. Bitcoin dominance cryptocurrency market with over 65% share currently. I think it's like 64. Bitcoin dominance is a metric that weighs Bitcoin's market cap against the rest of the cryptocurrency landscape. As the first ever cryptocurrency, Bitcoin enjoys a first mover advantage, brand power, and the most institutional interest and financial world support compared to the rest of the crypto market. Just go to this. Bitcoin dominance dropping could lead to massive altcoin season. I think this is a little premature, personally. As much as I love altcoins, I don't see this happening just yet. But Bitcoin dominance has since retested the 2-year long uptrend line and confirmed it as support turned resistance. With a bearish retest confirmed, further downside of Bitcoin dominance is probable. And when Bitcoin dominance drops, it is time for the altcoins to shine. So you can go into this, you can dig that up. It's not a very long article. However, here's the thing. I've seen some videos recently about people talking about dumping your altcoins into Bitcoin so that you could get those profits, right? So I want to look at this objectively, not as a clickbait video to drive up my views. I have a real hard time with putting out videos like that because the reality is a lot different than the dream, in the sense that when you're talking about altcoins and you're talking about Bitcoin. So here, the mentality is this. The mentality is, hey, I bought a bunch of altcoins. I watched them fall. I know Bitcoin's going to jump up in price before the altcoins do. So I'm going to dump my altcoins at a loss, ride the Bitcoin wave up a little bit, and then buy back into the altcoins and end up with more and average down and like everything that comes with that idea, that theory, right? So the problem with that is, and it's what nobody ever talks about because it's not as fun and it's not as clickbaity and it's not as interesting, are the fact that if you've bought these altcoins a while ago, let's say you bought them at a much higher position, okay, a much higher price, and you've been holding long this whole time. Let's say you've held through the bear market, you've watched them go down. Then you sell them, buy into Bitcoin. Well, what happens then? So let's just say Bitcoin goes from 7,000 to, let's just say it doubles, okay? Let's say it doubles by the halving. So we go to 14,000. So you've doubled your money. So you've got a 2x return, okay? Or 1x, I guess, really, because you just doubled it one time. But while that's happening, those altcoins you dumped are also going to be going up in value. Not as much, but they're going to be going up. So what you've ultimately done is you've dumped your altcoins, taxable event, okay? Now when you buy back in, you've just created for yourself a new taxable event. The clock starts again, okay? And we're going to go into this in a minute, the difference between long-term capital gains and short-term capital gains tax and how that affects you. So, but not only are you paying trading fees, but now you're basically starting over with your capital gains tax, which is the whole point. My Crow Your Coins, that's all about lowering your capital gains tax, okay? That's the whole point of it. And so you've got a 2x return, but then maybe your altcoins go up 1 or 2x in that same time frame. Think about it. It's a lot easier for an altcoin at 4 cents to double or triple than it is Bitcoin to double or triple. So while you're going to get some gains, the fact is, especially right now, it's much more likely, in my opinion. Now, this is not financial advice, okay? I don't want you to do anything that I tell you. I just want you to think about it and dig deeper and then figure out what you want to do for yourself. Talk to your professionals, your tax accountant, your whoever the hell helps you with your life, okay? Talk to those people. I'm just trying to point you in the right direction of thought, not telling you what to do. I'm just giving you stuff to think about. So what happens is, okay, I'm going to dump all of my altcoins at a crazy loss to buy some Bitcoin so that I can try and double my money. Then I'm going to go back into these altcoins and ride those waves up. But chances are, once that's come about, not only have you paid trading fees on both ends of that stick multiple times to get out of your alts into Bitcoin, out of Bitcoin, back into the alts, you've created taxable events for every one of those situations. And that 1x or 2x of Bitcoin that you got as you rode that wave up, not only is that now a new taxable event with short-term capital gains, you're paying the trading fees on top of that just to go back into altcoins that have now risen much higher than you likely got out of them. So you lost those profits while added capital gains tax to your trades. So now, to get more specific, I'm going to break this down a bit because I thought this was really good and I thought this would be really helpful. And I really hope people see videos that I do about taxes and they're like, I'll wait till the next one. And it's like, this is not your understanding how your taxes work in crypto, talking to your accountant, your CPA, or whoever, understanding how this stuff works is as important as the trading and the potential profits you stand to generate during this bull market. Okay? It really is just as important. And in some cases, even more. Capital gains are the profits from the sale of an asset, shares of stock, a piece of land, a business, cryptocurrency trading, and generally are considered taxable income. How much these gains are taxed depends a lot on how long you held the asset before selling. In 2019 and 2020, the capital gains tax rates are either 0, 15, or 20% for most assets held for more than a year. 0, 15 to 20% capital gains for assets held more than a year. This is insanely important, peoples. Capital gains tax rates on most assets held for less than a year correspond to ordinary income tax brackets of 10, 12, 22, 24, 32, 35, and 37%. You're talking almost half. So while you're risking everything on these swing trades and pipe dreams of being able to improve your position, you're creating these taxable events that can ultimately cost you almost half of any profits you do stand to generate, on top of the actual trading fees going to and fro. Is it worth it? Is that risk worth it? How much do you believe in what you're holding? If you believe in what you're holding, do you want to risk it? That's the question. What is short-term capital gains tax? Short-term capital gains tax is a tax on profits from the sale of an asset held for 1 year or less. For the 2019 tax year, the short-term capital gains tax rate equals your ordinary income tax rate, your tax bracket. Not sure what tax bracket you're in? Review this rundown on I'm going to link this whole article in the super chat here for everybody. There you go. This is the full article. I suggest you guys all read this and know it, and then discuss it with your tax accountant or your CPA. What is long-term capital gains tax? Long-term capital gains tax is a tax on profits from the sale of an asset held for more than a year. My favorite. If I have to have one, I prefer long-term. The long-term capital gains tax rate is 0%, 15%, or 20%, depending on your taxable income and filing status. They are generally lower than short-term capital gains tax rates. So if your income is between $39,000 to $434,000 a year, you're likely going to fall somewhere into the 15%, which is most of the world. I like how they got most of the world into that 115 percentile tax bracket. And if you happen to make, around $500,000, well, then you're going to pay 20% because the government's like, you know what, you're rich anyway, screw off. So there you go. They've even got a calculator in here and all kinds of stuff. Looking for a way to defer capital gains taxes, putting money into an IRA or a 401k. I know some people have self-directed IRAs that you can set up pretty easily from what I understand. Having trouble deciding whether and when to sell, a qualified financial advisor can help you understand your options. How capital gains, is this an advertisement? I don't know. What is the advertisement and what is the article? How capital gains are calculated. Capital gains taxes can apply on investments such as stocks or bonds, real estate, yada, yada. The money you make on the sale of these items. Okay, so this is basically a breakdown of the article. You can use investment capital losses to offset gains. For example, if you sold a stock for $10,000 profit this year and sold another at a $4,000 loss, the difference is $6,000. I get it. So that's what you're taxed on. So anyway, I read the article in full. I don't want this video to be exceedingly long, and I don't want to lose everybody. But I'm going to take a quick look at, right, you don't pay for holding. You pay less. You pay less. That's why I say you invest in the projects that you really like, that you believe in, and you hold. Crow, you have the best crypto videos on YouTube. Well, thanks, Sean. I appreciate that. Anytime I get compliments, I feel weird because I feel like I'm not. I just come on and go live. I tried doing a couple of those documentary style videos, and I mean, I don't know. Some people couldn't stand them. Some people loved them. I mean, to each their own. But this is so much easier to just come on live and talk to everybody, and it's just a lot easier. So, gotta roll with a little kind exchange. What? You have to pay tax just for holding? Well, no, it's not that you're paying tax for holding. And again, I'm not a financial anything, folks. I'm not a tax accountant. I'm not licensed or anything for any of this stuff. I'm just sharing my opinion, I guess. Talk to your professionals about it. But ultimately, if you invest in something, let's say I bought a particular crypto at $1. Okay, I bought one coin for $1. Well, my cost is $1. Let's say it goes up to $2. Okay, if I held that for a year or longer, then it's very likely that I'm going to pay 15% capital gains tax on that dollar difference. Not the full $2, not the dollar that I put in, but the dollar difference, the profit. And if I sold it before that year, then it will be dependent on whatever my tax bracket is, up to 37%. So I could be paying 37 cents of that dollar to the government as a tax, which capital gains tax to me is just the most disgusting thing ever. It's like the government's not risking anything. We're risking our money. We're risking everything in hopes of establishing a profit. You already taxed the income that we got to invest to begin with. Why are you now taxing the profits too? If we're making investments, to me, that's really disgusting. It's almost insulting, honestly. I don't understand it. I mean, I don't know. I guess maybe a part. I don't know. I can't. I even try. I try to make sense of capital gains tax other than another way of bleeding the public oh, did you have a good day? Did things go well for you in the market? Cool. We're going to take a whole bunch of that and you can go fuck right off. Thank you so much. Come again. So anyway, Crow, your edited vid was great. Well written. Thank you. There are little bugs in it, but I'm still learning. Anyone ever tell you that your voice is very similar to Luke Thomas, MMA journalist? No, I've never even heard of Luke Thomas. Just look up 8949 form on YouTube. Simple explanation on long versus short hold. Crow, thank you for sharing your experience. You are saving a lot of stress and mistakes that would cost individuals a lot of money. I hope so. There's only 114 people on this live right now because people don't care about taxes. It's just a fact. Now, if I said Bitcoin to the moon, I'd have 400 people or more right now. And it's sad in a way because I got a rude awakening when I did my taxes. I mean, there were things that I thought I understood that I didn't, apparently, and it cost me. And it really, really hurt. I mean, it really did hurt. It set me back. And you know, it's the way it is. You have to educate yourself, and you can't overlook some of these really important key factors in trading. If you're going to invest, you have to better understand what you're investing in, what you actually stand to gain at the end of it all. You know, I'm still playing catch up. You know what I mean? I'm still working out. I'm just trying to get whole again. And it was a very rude awakening, and it was honestly kind of disgusting, to be frank, but it's how it is. So, Wow Crow, you're not a very good communist. What? I'm not trying to be. The laws eventually will have to change once more people start using crypto. Yeah, they will. They will have to. But, you know, we just dropped below 7,300. That sucks. Come on, Crow. You crashed out and didn't plan taxes. You cashed out and didn't plan taxes. Actually, kind of right. I mean, I cashed out, and because I'm like, okay, well, I don't know what's going on. I guess we're resetting. And I did cash some out, and I did plan my taxes. I just didn't plan them with my CPA because I thought I understood. And he came back and said, no. Like that house, yeah, you don't get to write that off all at once. You have to break that up over 30 years. And that's what really did me in. That hurt. Because I just didn't understand. I thought, if you acquire assets and you handle things properly, that you're going to be able to write off more than you really can. And I mean, I guess that's just something that a lot of people used to think, and the government said, oh, no, we've seen this before. No, you can't do that. It makes sense for you, and it helps you, but it doesn't help us, so no, that's not how it works. So, and that really hurt me. I respect you, big man. Always love the content. Keep educating us all. Keep it up. Thank you, Andy Speed. I appreciate that. How can you not plan taxes? It's not necessarily a matter of planning your taxes. It's a matter of planning them properly with the right guidance. That's why I always say anytime I'm reading something or I'm sharing my opinion, I always tell everybody, man, don't listen to me. Use what I tell you to guide you down the right path. Ultimately, you need to talk to, and the thing of it is, too, is taxes on some level is also a state-by-state issue. How your taxes are handled, I mean, your federal, I'm pretty sure, is always going to remain the same, but your state taxes, that's a whole other issue, and that's going to be dependent on where you live. There are just so many different variables. Everything is such a convoluted mess, and I feel like a lot of it is structured in a way that if you're really rich, well, then you can take advantage of proper tax avoidance and not pay much. Most of us aren't, and so we have this convoluted mess that makes everything really, really difficult. And at every turn, you have a new reason why you have to pay out more of what you what you make. And I just feel like everything is set up to really screw people that can't afford the proper help or the proper guidance. And I don't know. It's just disgusting to me. All of it is. Looking at the live liquidations on BitMEX, nearly 200K in the last minute. But Crow, income is public knowledge. Sites tell you how much you pay. And that's not true. Even the crypto taxes are not clear to the IRS yet. Can't win. Exactly. No, but that's the thing. There is no winning right now. And the reality is the IRS, they can really do whatever they want. They could be like, you know what? You farted during our meeting, and I just rather throw you in jail because I don't like your attitude on me taking half your money. Like, they just do whatever they want. I don't even know if the IRS has any legitimate oversight. I don't know how that stuff works, but you know, I know that if you do not break everything down very clearly in a way they can understand, they can just throw a guess at you and say, you know what, we don't really agree with any of this bullshit you presented us. We think you made this amount and this is what you owe, and if you don't pay it, you're going to jail. I mean, it truly is like tyrannical, give us what we want kind of stuff. I mean, and it's scary, but that's kind of the point, isn't it? It's for everybody to be scared. The thing of it is based on the live views of this video alone, people aren't apparently that scared when it comes to crypto, which is scary to me because they're going to get you. Like, it doesn't matter what you think you're doing. Oh, I'm going to put everything into Monero and I'm going to send it off overseas and they'll never know. Yeah, they do. They'll figure it out. They'll find it. You're not going to fool these people, man. Their entire lives are focused around making sure you pay what you owe. Whether you owe it or not, I don't know, man. Like, it's just, they're going to get you. You know, this isn't the 30s, man, where people can, like, I don't know. It's just, don't play the game because you're going to lose. Don't play the game because you're going to lose. Do what you need to do. Educate yourself. Get the proper help. Make sure you get the proper support and helping you figure out a proper plan. You know, I use Elliot, and Elliot's been absolutely fantastic to me. He educates me every step of the way. He, you know, I mean, God, he's gone above and beyond for me. And, you know, Elliot Kravitz and you know, he's had some bumps in the past. But I mean, he's come through with flying colors, man. And myself and others are just like, you know, he's just done so well. And I'm very proud of Elliot for what he's helped me with. It hasn't all been, roses, obviously. Because, you know, he'll give you news you don't always want, but he'll help you figure out a way to resolve it. And that's the big deal. And that's the big thing. So, that's it, guys. I mean, be afraid. Be afraid and do the right thing. Make sure you educate yourself. And I'm going to post this article. Where did it go? Oh, and go get Crow Trader. Go get Crow Trader before Bitcoin goes up. That way you're not paying through the nose for it. But I'm going to link this one more time in the super chat just to make sure everybody has it to read through. Send it to your accountant. Figure out how much of that is relevant to you. And that's it. I just wanted to say hi and make sure that people are aware. This was at April 7th, 2020. Thank you, Tina Oram, for posting this. And hopefully you get some extra views out of this video. And I am going back to work on a lot of what I'm doing with the affiliate marketing stuff that I'm getting started with. So people have been joining, watching that video, joining the Telegram group. I already gave everybody a basic assignment to start off with as I'm working on course materials to help everyone. So I'm going to get back to work, and I will see you guys soon. Crow your coins.